The following is a technical analysis on Eli Lilly and Company, a company of the healthcare sector and drug manufacturers here off the daily interval, with the known by pundits, dubbed by pundits as the King Kong of drug weight loss pills in tirzepatide. It has been a heck of a rally where we actually called right throughout that primary support level, primary reactionary uptrend line. And that was good for 50% in gains, or we actually called the top here, initiated that sell signal, and that was good for 16, 17% crash there. I am a firm believer in Eli Lilly and Company. I am a long-term investor in Eli Lilly, but I believe we've reached a critical juncture. Or we'll take away the lines here, and what I see from a jagged stance is a head and shoulder, a looking top here, and a potential sell signal now. Yeah, we didn't get that solid daily candle close that I would have liked, but again, offers a nice risk reward short trade setup to the downside, whereas we have a snapback. If we have that snapback and or counter trend rally, I'll call it 3.5% in gains there, coinciding with that 468-ish price resistance. Call it a dual line of resistance, which would offer an objective short trade entry down to my first target at 435.35 price support for a 6.9% crash, which will coincide with the 50 exponential moving average and 50-day moving average hovering in up above there, down to 42.264 for a 9.5% crash, down to 407.51 for a 12.6% crash, and then ultimately 375.48 last target there for double-digit 19.7% crash, which will coincide dual support amongst the 200-day moving average. We have a nice clean rising bearish wedge pattern, nice clean divergent high, negative and bearish divergences really constructed and established amongst all three technical momentum indicators with crossovers there on the moving average convergence and oscillator. Whereas we have the oscillator histogram putting in nice clean red candle close prints below that inflection point. And it would be really nice to get it, talk about a big market sell-off, especially in the healthcare sector, if and when that happened. A 24% crash back to the primary uptrend line off the January 2021 reactionary lows there. A multitude of reactionary lows. Call that very strong support there, if and when we ever got that. But again, these are if you're a long-term investor and you are a firm believer in Eli Lilly and Company in the long term, in the long run, 10, 20 years out now, these are your key dollar cost average levels to hone in on there. And if we even snap some of these key levels, I guess I will definitely keep you updated if I see any more significance in the charts and updated on some new well-defined key inflection points. Where now within the Eli Lilly realm, we are at nosebleed valuation levels here, and when everyone's packed on one side of the boat there, and thinking the price could only, and stock price could only go to the upside, is when you could have increased odds for a crash, a double-digit crash to the downside, and an extreme bull traders and technical traders an all-out rush for the emergency exit doors.